The U.S. Federal Reserve Fed is set to be abolished. If you're not aware of this yet, and you're currently investing in stocks or bonds, especially in the U.S., or even if you're simply holding on to your money without taking any action, after 2025, your assets will face two possible outcomes. First, a gradual decrease in value, and second, a sudden loss in value. Why is this happening? Although Trump and Musk ostensibly claim to be implementing government reforms, their true intention is to eliminate the Federal Reserve. On the surface, they appear to be at odds with Fed Chairman Powell, but in reality, they're aiming to eradicate national debt. What does this mean? Greetings, everyone. Previously, the U.S. told the world that if you handed over your gold to be stored in their national reserves, they would provide you with U.S. dollars. You could then use these dollars for transactions, and whenever you wanted your gold back, you could exchange your dollars for gold. This system was known as the gold standard, meaning the U.S. dollar was backed by the value of gold. However, suddenly the U.S. abandoned the gold standard. Since then, you can still use U.S. dollars for transactions. But if you try to exchange dollars for gold, they won't do it anymore. This means the U.S. has been printing money to trade for gold from around the world, leading the world to accumulate U.S. dollars for transactions instead of gold. The Federal Reserve began continuously lowering interest rates and printing money, causing the dollars held globally to rapidly depreciate. Subsequently, the U.S. informed everyone that holding U.S. dollars would lead to depreciation. Therefore, they asked, "Lend me those dollars, and I will pay you interest." This forced the entire world to lend dollars to the U.S. Currently, the U.S. owes the world an enormous amount, so much that they can't even pay the interest. Musk, who played a key role in bringing Trump to power, proposed an unprecedented idea to shut down the Federal Reserve. If today the institution responsible for issuing U.S. dollars is shut down, will the U.S. dollar become worthless? And if the dollar becomes worthless, will the U.S. still need to repay its massive debts to the world in dollars? This is akin to saying, even if I owe you a lot, the currency has lost its value, so repaying you in dollars doesn't hold much meaning. Many might find this hard to believe. How could the U.S. erase the value of the dollar? Musk also stated that in the future, the U.S. won't need to use dollars anymore and will switch to Bitcoin. If they seize power, this plan could be implemented, rendering all the money the world has lent the U.S. unrecoverable. Is this real? In reality, the U.S. is gradually diminishing the role of the dollar. Just this year, 6 states in the U.S. have recognized gold as a form of currency. What does this signify? In the U.S., sometimes the power of a state exceeds that of the federal government, meaning states can choose not to follow federal decisions. These 6 states have declared that in addition to using U.S. dollars for transactions, their citizens can also use gold. Globally, countries typically use their own currencies for transactions. For example, in Japan, they use yen. In South Korea, they use won. No one carries gold around to buy a bowl of ramen in Japan. However, paper money is just a piece of paper printed at a very low cost, while gold requires mining and processing at a high cost. Therefore, for convenience and cost reduction, countries usually opt to issue their own paper money for transactions instead of using gold. But if the trend of using gold as currency resurges, the global financial system will undergo significant changes. Today, if you say you can use Bitcoin or other cryptocurrencies to make payments, you might just need to scan a QR code with your phone to complete the transaction. This is considered technological progress, and you might think it's all about convenience. However, if now you're asked to revert to the ancient practice of holding gold to buy goods in these 6 states, what does that mean? In a previous video, I discussed an alternative to the US dollar, gold. When the dollar strengthens, gold typically loses value, and vice versa. If people start using gold instead of dollars for transactions, will the Federal Reserve lose its authority? That's why even Warren Buffett doesn't dare to recommend buying gold, fearing it would undermine the very foundation of the dollar system. But now that these states are beginning to link the dollar with gold and encourage citizens to use gold instead of dollars, could this be a sign that even they feel the dollar is in trouble? Are they preparing for citizens to convert some of their dollars to gold before things get worse? Recently, it seems that Trump has changed his stance, declaring he won't force Chairman Powell to resign. What does this mean? I believe this could be the largest financial scam in history, and what's notable is that it has been legal for the past 4 years. Trump's covert plans were hindered by Biden, but after Trump returns to power, these financial maneuvers will resurface. The hard-earned money that countless people have struggled to accumulate could be wiped out in a short time. What does this imply? If you don't want to become a pawn or victim of this scheme, or even if you want to leverage it to surpass the current class, you can follow my channel. In future videos, I'll provide more information. If you're worried that after watching, you might not be able to act, you can like this video. This will help save it to your playlist so you can revisit it anytime. First, what is Trump's plan? The U.S. currently lacks sufficient funds, so they need to transfer money from around the world to their own country. His plan is an upgraded version of money transmission. If successful, after 2025, the assets of the middle and lower classes worldwide will be transferred to the U.S. Simply put, the U.S. has borrowed your money but can't repay it, so they'll let you, the lender, bear the debt instead. What does this mean? Previously, why was the world willing to lend money to the U.S.? It's simple. For example, if I lend the U.S. $1 million today, they would use that money to invest in their economy. Each year, from taxes and profits, they could earn $200,000. Out of this, they would pay you $50,000 in interest. Both you and the U.S. benefit, and you wouldn't mind continuing to lend money. But nowadays, you'll see that the U.S. isn't like before. After borrowing $1 million, they only use $300,000 for business investments, while the remaining $700,000 is squandered under the guise of providing subsidies to American citizens. In reality, it has gone into the pockets of a small, powerful group. This causes U.S. tax revenue to plummet while spending continuously rises, resulting in the U.S. no longer having enough money to pay you the $50,000 annual interest. They have to borrow new money to pay the old debts. When it's time to pay the $50,000 interest, they have to borrow an additional $50,000 from someone else to pay you back. Then, they repay you but don't have enough money to settle the debt, so they borrow from another party. When people realize that even though the U.S. appears capable of repaying debts, in reality, it's like someone living on credit cards, spending everything each month without the ability to make payments. When the time comes to repay, they have no money, so they swipe another credit card to pay off the previous one, extending the debt period. However, the interest on the principal debt is already unmanageable, and now with compound interest, the debt grows even larger. Therefore, people aren't foolish and start refusing to lend the U.S. more money for this very reason. In recent years, the Federal Reserve has raised interest rates in hopes of attracting global lenders to the U.S. or to purchase U.S. government bonds. However, the problem is that even with higher interest rates, long-term U.S. bonds still aren't selling well. Why is that? It's simple. Even if you know I can't repay the debt, if you agree to lend me $100 million for 10 years with a commitment to pay you $5 million in interest each year instead of the previous $2 million, it sounds attractive, right? But in reality, the $100 million you lend isn't being used for profitable investments. It's merely used to pay you $5 million annually. So after 10 years, will I be able to repay the original $100 million? You don't need to worry about that as long as you receive $5 million in interest each year. But would you dare to lend under these conditions? According to textbook theory, When the U.S. raises interest rates, bond yields increase. When the U.S. lowers rates, bond yields decrease. However, currently, whether the U.S. raises or lowers interest rates, bond yields are still rising. Why? Think about it. If many people are competing to lend you money, you only need to offer a 2% interest rate. But now, you have to offer up to a 5% interest rate. This indicates that no one wants to lend you anymore. Currently, the U.S. can borrow about $50 billion for terms of 10 to 20 years and about $400 billion for 2 to 3 year terms. However, for short-term loans ranging from 3 months to half a year, they can borrow up to $1.5 trillion at very high interest rates. What does this show? People don't believe the U.S. can repay the principal in the next 10 years. But if they offer short-term loans of 3 to 6 months with promises of high interest rates, people are willing to lend immediately. Even Warren Buffett, a patriotic figure, only buys short-term U.S. bonds, not long-term ones. Therefore, to continue borrowing money to service debt, the U.S. is forced to continuously take on short-term, high-interest debt to pay the interest on existing debts. However, Trump has declared that once he regains power, these short-term debts will come due, and new lenders will be scarce. Ultimately, fewer and fewer people will be willing to lend. So, Trump aims to continue lowering interest rates, but what will be the final outcome? The U.S. will have to print money to repay debts. When they start printing money, the dollar will flood the market and lose value, leading to a vicious cycle. The fewer people willing to lend, the more money the U.S. has to print, and the more the dollar depreciates. As the dollar loses value, U.S. assets are like being sold off at a discount. Therefore, Trump's plan addresses this issue by eliminating the willingness of others to lend or use the dollar altogether. One extreme option is to abolish the Federal Reserve, Fed, and switch to using Bitcoin instead of the dollar. Is this feasible? Although the Fed is America's central bank, it is not a national bank, but a private institution. This means that Trump does not have the authority to dismiss the Fed chair, similar to how you cannot fire the CEO of a company you do not wholly own. The only option would be to bankrupt the company, but you cannot remove the CEO. You might be surprised to learn that the U.S. owes the most to the Fed, not to Japan or China. In other words, the Fed is responsible for issuing dollars. When the U.S. is short on funds, the Fed prints money and lends it to the U.S., but this money must be repaid. Moreover, a large portion of the taxes the U.S. collects from its citizens goes back into the Fed's coffers. This indicates that the Fed is effectively the true owner of America. The money you work hard to earn ultimately turns into interest paid back to the Fed, and the Fed can simply print money to collect all that interest. So, who actually controls the Fed? There are rumors that a very secretive family owns assets worth over $50 trillion, while the current U.S. debt is only around $36 trillion. Recently, American media reported that an heir of this family died in a fire at a mansion. What does this mean? If you have thoughts, feel free to leave comments. However, history shows that those who have attempted to abolish the Fed have not met favorable outcomes. For example, President Lincoln planned to issue greenbacks, and Kennedy wanted to peg the dollar to silver. Both initiatives ended in disaster. You can research more about these events in historical news reports. I really don't understand why many people believe that if the government borrows your money, it will definitely pay it back. For example, U.S. government bonds are considered the safest assets in the world, but history has shown that defaulting or going bankrupt is entirely possible. They might be able to pay interest, but the principal you lend them might not be returned. This is the current situation in the U.S. Naturally, this condition could persist, so many people aren't too concerned. However, if you hold cash and the U.S. reduces interest rates or prints more money, the value of the money you've painstakingly earned will immediately decrease. In other words, there is no completely safe investment in the world. In reality, not investing is even more dangerous. Even if you try to avoid learning about investments, you will ultimately have to face it. As mentioned, Elon Musk has proposed abolishing the Fed, indicating he doesn't want to prolong the current situation. However, I believe this is only a last resort, as Trump has upgraded his strategy to make the entire world lend money to the U.S. and help the U.S. pay its debts. What does it mean? America's debt strategy version 1.0 was during a time when the world was at war, and the U.S. didn't participate, but sold weapons to make money. After the war ended, the U.S. seized cheap opportunities to get rich while the rest of the world was impoverished. At that time, the U.S. told the world, "You are lacking in money and resources, so borrow our dollars to build your homes and factories and reconstruct your nations. We will also sell our products to you, but you must pay interest." As a result, the U.S. quickly became the world's main creditor. People around the world have to allocate part of their income to pay interest to the U.S., similar to buying a house where the house is yours to live in, but your wages have to go to paying interest to the bank. This debt strategy is essentially the U.S. lending at high interest rates to turn the entire world into its workforce. However, this strategy eventually lost effectiveness because houses and factories worldwide were sufficiently built, economies gradually recovered, goods were produced and sold, and profits significantly increased. Therefore, no one needed to borrow money from the U.S. anymore. American citizens became accustomed to being the masters of the world and to being subsidized by the entire globe. They no longer worked much and simply used money earned from all over the world to spend and shop. Consequently, America's lending business began to decline, with profits decreasing while spending continued to rise. The rest of the world kept producing and earning lots of dollars, leading to the need to upgrade debt strategy 1.0 to version 2.0. Strategy 2.0 involves borrowing. Specifically, you earn a lot of money, right? The U.S. will expand its balance sheet by printing more money, increasing the risk of the dollar losing value. If you don't want the dollar to depreciate, you will have to lend your money to the U.S. and in return, receive an initial interest rate. This borrowed money is used for business investments to generate profits, but eventually it's divided among corrupt domestic corporations, and now even the interest cannot be paid. Therefore, they had to upgrade their strategy to version 3.0, which is essentially stealing money. Why does the entire world earn so many dollars from the U.S.? Because countries sell goods to the U.S., and the U.S. pays them. Now, after you sell goods and earn U.S. dollars, you have to pay back 30% of that money to the U.S. For example, if you earn $1 million from the U.S., you have to return $300,000. This means that the money the U.S. issues doesn't decrease, but the money it receives increases. If you don't agree to this, don't think about earning money from Americans anymore, as the U.S. won't do business with you and might even punish you. This will result in even greater losses for you. This is essentially a form of taxation, and militarily, the U.S. won't protect you. It may even cause you difficulties. Trump and America's financial managers have plans to categorize countries around the world into 3 groups. The first group consists of countries that want to cooperate closely with the U.S. and have good business intentions. These are placed in the blue bucket. The second group includes neutral countries that want to collaborate and earn money from the U.S., while also purchasing American goods. These are assigned to the yellow bucket. The third group comprises countries that wish to confront the U.S., solely aiming to profit from the U.S. and steal American technology. These are classified as the red enemy countries. Which group you belong to will determine how the U.S. treats you, ranging from favorable treatment to sanctions. You can even choose to be in the blue bucket and receive better treatment from the U.S. by signing certain agreements. For example, Japan signed the Plaza Accord with the U.S., agreeing not to raise tariffs significantly, but in return, Japan had to sell dollars to buy yen. This caused the Japanese yen to appreciate against the dollar, and the dollar depreciated. Within just 3 years, the Japanese yen had increased in value by 50% compared to the dollar. This means that Japanese goods became twice as expensive, while American goods became half the price. Japanese consumers no longer wanted to buy domestic products. Instead, they purchased imports from the U.S. At the same time, Japanese capital began flowing into the U.S. to invest in American stocks and assets. American investors and entrepreneurs also withdrew funds from Japan and brought money back home. This is akin to the U.S. immediately draining funds from Japan. As a result, doing business in Japan became very difficult. People stopped consuming domestic products, stopped traveling for investment, and even moved their funds abroad. In recent years, those in Hong Kong have also likely experienced similar situations. Previously, Japan wasn't extremely wealthy. They could purchase the Rockefeller Center in the U.S., acquire Columbia Pictures, Universal Studios, and property prices in Tokyo were even higher than in the entire U.S. However, when assets reached a bubble and your money was drained, real estate and stock speculators couldn't find anyone to continue bearing the debt. Your properties and stocks would be sold off en masse, resulting in countless people losing jobs, going bankrupt, and the real estate bubble bursting immediately. The suicide rates in Japan at that time surged, making it a global leader. When you do business and your products don't sell, the invested money gets stuck. Many Japanese businesses have broken their capital chains. In such situations, you're forced to hold on to your business, while American capitalists can come in and buy them cheaply. You'll realize that all of this isn't a conspiracy, but a functioning model. If you are placed in the red bucket, meaning you are in opposition to the U.S., America will increase import tariffs against you. At this point, you might allow your currency to depreciate. For instance, if the U.S. raises import tariffs by 10%, your currency must also lose 10% of its value. Otherwise, your goods will become too expensive and no one will buy them. For example, if Vietnam is categorized as a red enemy country, products like Vietnamese lighters will be taxed, making Vietnamese lighters and American lighters nearly the same price. Consumers who used to buy Vietnamese lighters might switch to buying American lighters. Therefore, you are compelled to let the Vietnamese dong depreciate so that Vietnamese-made lighters can be cheaper than American ones. However, if your currency devalues, everything you buy from the U.S. becomes much more expensive. For example, if you want to develop AI, you need to purchase high-end graphics cards like NVIDIA's from the U.S., but because the Vietnamese dong has lost value, buying NVIDIA's graphics cards becomes more costly. This means that the U.S. raising import tariffs allows America to earn more money. Your currency loses value, making American goods cheaper for Americans, but more expensive for you. Even though transactions still occur, the money you earn has to be shared more with America, and you have to pay higher prices to buy American products. Imagine I start a high-tech company in Vietnam, such as a chip manufacturing plant similar to coastal factories, but because I set up the plant in Vietnam, the U.S. will sanction me. If I don't want to be sanctioned, I would have to relocate my company to the U.S. Once moved to the U.S., I become a domestic entity, not only exempt from import taxes, but also eligible for subsidies. For this reason, high-tech companies and talented individuals in Vietnam will be drained away, leading to high unemployment rates and a declining economy. No matter which path you choose, your money will eventually be moved to the U.S., just sooner or later. Do you get the main point? If you are a country placed in the blue bucket, your currency has the potential to appreciate. Conversely, if you are placed in the red bucket, your currency is at risk of devaluation. Countries that were previously in the blue bucket, meaning those that signed the Plaza Accord, such as Japan, the UK, Germany, the US allies, Sweden, Switzerland, Canada, and others, will see their currencies in the blue bucket appreciate against the dollar once this classification system is implemented. Therefore, if we convert currencies from these blue bucket countries, like exchanging into Japanese yen, we can use the yen as a safe asset when the dollar loses value due to the Federal Reserve reducing interest rates. Personally, I have exchanged a certain amount of yen before because I frequently traveled to Japan and needed yen for transactions. When Trump regains power and implements his money-moving strategy 3.0, or if the US genuinely cuts interest rates while Japan increases its rates, the Japanese yen is likely to appreciate significantly. At that point, I would look for good investment opportunities to buy more yen. Note that I consider the yen as a risk-hedging asset, meaning I hold it because I believe the dollar will depreciate against the yen. I buy it not to make a profit, but to diversify risk, because I hold a large amount of dollars. Think about which countries might be placed in the red bucket, causing their currencies to devalue. Would this be a good time to bottom buy and purchase cheap assets? Share your thoughts in the comments below. Due to time constraints, I will pause here. I provide free information on how to become wealthy, a successful entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video with everyone. I sincerely encourage you to like this video to quickly achieve financial freedom. As long as you find 1 or 2 points in today's content that help improve your life, I am satisfied.